All right, Chaz. So it's March 16th, around day 6 or 7 since the initial bank run has began. And what happened today is that the big banks, JP Morgan, Goldman Sachs, Morgan Stanley, they all came in to bail out FRC and gave them $30 billion of funding. So this is very wild. The last time the banks got together was in 2008 to bail out Bear Stearns, and that actually never went through. But before I get into anything, there was a lot of updates. The bank stocks loved it today. I think we could use some of this cash right here to give you a breakdown of what really happened and the irony of all of it. So this is the big banks here with the big $100 bills, the 50s over here. That is your SVB, and these are the small regional banks. So at the beginning with SVB, everybody was worried. They were worried that all of this money would be taken off of the board. Nobody would be able to access it. Well, thank God for the bank term lending facility. That's what they call it. And we actually have news today. It hit a record high. I'll show that for you here. And so far out of that $25 billion, there has been $11.9 billion that has already been withdrew. So all of this is the money in the banking system. But again, people get worried about SIVB. They started to put their money with the big banks, right? So now the big banks, they're getting more deposits. And now here's all the baby regionals. Everybody starts getting worried. What do? They take their money from the regionals and they start putting it in the big banks. So look at this is the regionals. They're losing their money in deposits. Everyone's freaking out. They're down to their last deposit. All that money goes somewhere. And literally that means people withdrew from here and put it over here. So now all of a sudden they need more money. They're borrowing from the Fed. They're doing all of this stuff. And then all the money that went to the big banks said, well, we're going to give you $30 billion and we're going to make sure that you have capital, and all of the money that just went there comes back to it then. So yeah, they're hailing it as historic, but hopefully this visual helps. Now let's jump to the screen since I ran out of battery on my other camera. So yeah. So that's the main story of the day. FRC in this bailout. That is what is dominating headlines here. And we had a little bit more. But before we get into any of that, what I want you to notice here is how the stock market is looking since all of this has happened. It's now been a full week. Last Thursday was when we had the whole SVB incident. And if you remember, that day you actually opened up and you started going green, and it wasn't till like the second half of the day where everybody started panicking, and then by Friday you had more panic, and then you had Signature Bank and the Fed here, and well, these have been our last couple of days. So right now we are in the middle, but one thing I want you to notice, the banks bounced up today. They are substantially lower. This is just XLF, so the regional banking index, KBW, that is down a lot more, but really all that happened today was either lack of news, which kind of allowed us to calm down. So it felt like it was a giant rally, but if you notice, the bank stocks are still dealing with this scenario, and the real main story behind all of this today, it is tech. Believe it or not, during all of the last 4 days or so, tech has been the winner, and people are going to tech as if it's a safe haven now that people are worried about interest rates, bank run, and anything else that could happen. They're saying, well, at least these tech companies have money. So that's the first thing I wanted to start with. But as far as the updates now, I'm telling you, there was a ton. So let's start with FRC. Even after hours, what you noticed is that they dropped after making all of this announcement, and they were down. They were down like 30% today. Then they found a way to go up like 10%, and now they still closed after hours below where they were yesterday. So what they announced was, one, as of March 15th, they said that they had $34 billion, not including the deposits that they're getting from all of the big banks, Bank of America, Citi, JP, Wells, Goldman, Morgan Stanley, Bank of New York Mellon, PNC, State Street, Truist. So literally, those are all of the banks that helped them out today, and where probably some of those deposits, FRC left FRC and went to those banks. And then they gave an update that from March 10th to March 15th, bank borrowings from the Federal Reserve, they varied from $20 billion to $109 billion at an overnight rate of 4.75. And this is what I showed you earlier. The discount window of the Fed has been used more than ever, as everybody has been tapping this, and they've already used almost half of that new facility that was created Sunday night, Monday morning. So there was the second update, and then finally, since the close of business March 9th, the bank said that they have increased short-term borrowings from the Federal Home Loan Bank by $10 billion at a rate of 5.09, and usually that is used for more liquidity concerns. I believe Silvergate, that was one of their final loans they took, was from the Federal Home Loan and Bank. So we'll see how this all plays out, but this was the update. But now let me swing you to the rest of the world, because there was a lot of other updates. So what we also found out today, this one came in right after hours, but Schwab clients pulled $8 billion from their prime money market fund. Then we found out prior that Citadel offered to buy the $3.3 billion deposits held by Silicon Valley Bank before talks fell apart. And then to top it off and to show you how crazy everything is, Credit Suisse got $54 billion and nothing really happened. Everybody started focusing on the domestic banks here. So these are your updates so far. This is everything that happened. And now with FRC, I mean, even in general, I think the two big things to notice here, number one, is how the bank stocks have been reacting when there has been no news or something just doesn't get worse. That's what we've been talking about the last couple of days, and that's where we see it. But now the second thing is, where do we go from here? So here are the Fed futures. They didn't do anything too crazy today. They actually calmed down, which is a good sign, but this is all I'm saying about moving forward. This is going to be the only thing that actually matters, because come Wednesday, if Powell actually pauses rates, I think that will be a sign that deflation is coming in, and that will be a huge shift to the whole economy and everything else we've been dealing with. If he goes ahead and raises by a quarter, I think everything is all good. But like we were talking about the last couple of days here, all we need to be watching now for tomorrow is, does anybody go bankrupt? There's a rumor going around that everybody's waiting till Friday to hear more about it, so we'll see. And then Monday and Tuesday, as long as nothing else happens, all it's going to boil down to is Wednesday and Powell. And why does Powell matter for banks? Because it's simple. Not only do I think the economy will change a lot, what I'm trying to tell you is, if this bank run is going to be an issue, they're moving all this money around, doing this and that, we will know if the Fed changes course. If the Fed is saying, yes, everything we've worked on, it makes more sense to start defending against this than inflation, then there you go. That means this bank run and this bank problem is serious, and it will continue. So that's the way I'm breaking it down. I think it's super simple. Tomorrow is going to be a major expiration, and we talked about this from the beginning of the month. We said, beware the Ides of March, because second half of March, at the shift and at the option expiration, that's where usually things start to go crazy. So afterwards, I don't know how tomorrow will play out, but afterwards, leading into Powell, I think it will lead to either a much bigger bounce or a much bigger decline. So that's pretty much everything. The final thing I will end it on, and we talked about this today, is why in the world would all of these banks deal with FRC? Why would they come together and do this? Again, like, I think it was in 2008, it was like 25 banks lost like $300 billion. So far, it's been 2 banks that have lost over $300 billion in assets. Like I said earlier on the other video, I wouldn't be surprised to watch a solution, then a failure, then another solution. But today, we found out that Jamie Dimon of JP Morgan, he met with Treasury Secretary Yellen. They had the talks of it, and the way it's looking like, it seemed like this was all under the government, but there was no government funds used. The government kind of got everybody together, made sure it happened, but no government money was used. And why? This is just my theory. I think it is kind of highlighting that, one, if you had one government facility on Monday, half of it's already been used by today, The last thing you want is the second government solution all in the same week. I think that's why they had to. But now the other part is simply it was probably in these banks' best interest. A lot of the CEOs were saying that these small banks are necessary to the financial system, this and that. Well, it seems like it was in their best interest, whereas if they didn't support FRC, it could have created a lot of other problems for all of these banks. The other tinfoil theory that I have is simply if we have more problems ahead of us, I think all the big banks said, hey, we're going to cooperate and try to help out, because if there is another problem, it'll make sure that they get protected under any other broader bailout terms, and they could say, hey, look, at least we try to help in the beginning. So either way, it's all speculation. Like I'm saying, the main focus right now is determining, is this going to be a real banking crisis? Is this bank run going to continue? And how do we know, especially when assets are very volatile on a day-to-day basis? Very simple. Wait to see if Powell changes plans. If he does, we got a big banking problem. If he doesn't, it'll buy us time to like April, May, or June, and then we go from there. But Chad, that is it as far as everything else today. I mean, we're going to have to do some rollovers tomorrow. I don't think I made any other plays. What did I do? I closed out the UBS way too early, closed out all Netflix. These were both small gains. Got like $200 on old Suave shares, $300 on Zim. Closed out of that, starting to trim a little things, and then I rolled over the Rita, closed out the contract, $2,188, but I got $2,688 back, so that's pretty much the amount of both contracts that I sold. Now we got a great 105. We unlocked like $40 or $50 of equity, so still holding that. And then I sold out EPV for another $200 gain, still holding the EUFNs, but that was pretty much it. I think tomorrow, going to roll over a couple of things, see where we're at, but all of the plays are going to come by Wednesday, and then we are going to see what's up. So I hope you're ready. But that's your watch list. I don't know. I would do, even though I'm on the computer, I would do the other normal computer one, but since I did some of the camera, I don't know. Is this awkward? It's not. I got a horn. It's not awkward, man. I love you, Chad. So God bless you all. I'll see you in the morning. Keep getting that long term. And remember, baby, watch out for that stony heart. Oh, they don't feel me. Horn.